debt in a real estate trade. You can trade property with debt, yet many agents don't understand the mechanics of such a trade. Now here's the problem. The buy-sell market limits the client to a cash sale or the buyer to a cash or cash-to-loan deal. Now there are hundreds of formulas and solutions to a transaction in addition to a traditional sale. So let's see how this works. Now another thing, if you are interested in trading and exchanging, Bob Steele has a very good book called 300 Ways to Buy, Sell, or Exchange Real Estate. Very good book, I would recommend it. When we think of debt and equity, we realize that most of us have more debt than we have equity. Loans today can range from 97% to 100% debt and 3% or less in equity. Now that makes the lender a major player in your investment and limits your ability to freely take any deal that comes your way, because the lender does want their money back. But debt does not mean you cannot trade or that cash or cash to loan is your only option. Now, trading is a very practical market, and equity trading is practiced all over the world. Advertising your property for sale or trade will at least broaden your market, and you want the most exposure possible. I would say find an agent that understands trading and exchanging so you can broaden your market, because you don't want to exclude offers from anyone. You want all offers to come in. Now in this exchange process, you may actually see other options that will work for you, and you may want to trade up or trade down or trade for a duplex. You may even want to take land in cash for your property or notes in cash for your property. Now the options are only limited by what you and your client are willing to accept. Now, since the lender is a major partner, this means that most institutional lenders want to be paid off at closing, and as borrowers, we need to make that happen. Now, agents and clients have told me this in the past. I have to sell to get the cash to pay off the lender, and then I can go buy something else. Now, true, the lenders do want their money back when you decide to go out of ownership. So, how does debt work? Now, people know they have debt and equity. That's a given. We realize that we own the equity, but you also own the debt. But, you know, we just don't think of debt that way. Own the debt? It's just a loan, so what do you mean? The saying in the trading and the exchange industry is, you own the debt, so take it with you, because we like to trade property that's just free and clear. And that way debt is not in the way. But since you own the debt, you can take it with you. You say, well, how do I do that? The lender wants their money back, so how do I get rid of the debt unless I've got a sale? For example, you have a house worth $300,000 and you owe $200,000, and you have found a home in another city that will accept a trade. Now that home is also worth $300,000, and those folks owe $225,000. Well, let's just see how that would work. So the short answer is, now you write a standard contract and apply for a loan on the new house in the other city. The loan can be any amount that pays off your current mortgage and meets lender guidelines. Now the other folks taking your house will write a contract to you and apply for a loan on their new home and pay off their existing $225,000 mortgage. All the same lender guidelines like debt and income ratios, loan to value, and appraisals and inspections will all apply. So if you have been following the math, you realize that your net is $40,000 at closing, and the other party will net about $15,000. So when you place these loans on the other properties, you actually did take your debt with you. Now you and the other party will need to add language to each other's contract saying this is a simultaneous transaction, and reference each other's property and have the same closing date and the same time. Now in this trade example, after the parties make the deal and take the other's home and agree on a simultaneous closing, the contracts, the price, the disclosures, and appraisals or like any other transaction that you have ever done. Now at closing, the equities will be netted and each property owner will get their new loan, their new home, and walk away with some money in their pocket. Now this example is just one of many, many ways to structure a trade deal. And this owner-occupied example, at this price level, you don't have to worry about mortgage relief, mortgage over basis, capital bank gain, or depreciation, or any of those things, because this is a residential property. Now in my next video, I will value the same house, the same values, and this time it's held for investment. And these folks will need a 1031 tax-deferred exchange. So that's it. My contact information is on the screen. Contact me for sales and trades and exchanges, and I also do residential and commercial consultation on a fee basis. If you need an analysis on your income stream or your property, call me up and let me know. Thanks for watching.